All right. Well, good morning, everyone. This is Scott Thompson, Senior Manager at Schwab Coaching. Happy to be here with you today. Happy Monday. And big shout out to Eva and Paul and Lori and Kevin and Dragon and Ted and everybody else in the class today. Thank you for taking time out of your Monday morning. I'm sure busy scheduled to join me today. Brett Crowther's there in the chat. He'll be answering any questions that come up, and I'll be watching those as well as we go through here. A lot to cover today. One of the things that's come up often in our sessions over the last several weeks now is like, when can I add to a position? So I want to talk about that today. And then as promised, we'll do a update on our a special live only session today after we finish our content today. We'll give an update on our S&P and NASDAQ tracking system and plan that we're using. So we'll give an update there. But before we jump in, let me remind everybody that our presentation today is for informational purposes only, not a recommendation of any particular strategy or stock that we cover. Schwab does not recommend the use of technical analysis as the sole means of investment research. We are using the Paper Money software platform. There are some significant differences in that compared to your Live Money platform. We'll be talking about stop orders again today. So just remember, there's no guarantee that the execution of a stop order will be at or near the stop price, could be significantly lower. And remember that all investing involves risk, including the loss of principal. Let's go ahead and jump in here. Very first thing I want to do is take a look at some resources that are available. This is Stock Investing for Beginners. So there's usually some new people here every time. Welcome to those of you that are new. You can follow me and Brett on x.com at Scott Thompson CS or at Brett Crowther CS. Another great resource here is the YouTube channel, our Trader Talks from Schwab Coaching webcast. I'll go ahead and set this link here in the chat for everybody. But one of the things that's kind of cool here is if you go to the playlist page from the homepage when you sign in, click on playlists, all of the sessions that we ever teach are available here in the different playlists. Ours, of course, is here, Stock Investing for Beginners. You click on the full playlist here and you can see all of the webcasts that we've done. I'm labeling these kind of episode 1, 2, 3, 4, and 5, and so on with the different titles. I've got a couple little short videos in here that talk about our investing plan that we've covered. The main investing plan is in session 3 or episode 3. One of the other things that's cool, I hope, is that when we finish a webcast, there's usually quite a few questions that we can't either answer completely in the chat or haven't got an opportunity to answer completely. And Brett does a fantastic job there. And so sometimes I'll add to what he said in the webcast itself. So like when this webcast that we're doing right now is posted, and the first, we'll do about 20 minutes or so of today that's going to be archived and recorded and available on that playlist. But what I'll go do is I'll add the questions, that were there. Most of these, again, Brett answers in the chat, but for those that are watching the recording, they don't get to see the chat. So I'm going to repost those questions here and I'll answer them in the comments section. And so hopefully that'll be helpful for you. So if you have a question in there, you like some more details, we have very limited space in the chat, but I can have more room to answer those for you there. The other thing that's been really helpful is when you go to our schwab.com /coaching page is we have some resources that we introduced a few weeks ago. And one of those is a trading journal. And then there's a few little videos there about how to use the trading journal, but I'll be showing that a little bit today as well. But I wanted to go through those resources and show you what those were before we get started. Let me go over here now to our Thinkorswim page, give you just a brief update. Again, we have 3 different investing plans that we're trading. One is where we invest $5 per day, which actually ends up being $7.24 every trading day or every market day. And we're investing in an ETF that tracks the S&P 500 and the NASDAQ. And so we'll do a live only update later on when we finish that. Our sample plan number 2 is we're investing $50 every week in the top 10 holdings of those tracking instruments. And so that's right here. These are the stocks, again, not a recommendation here, but these are the stocks that are in that top 10 holdings. And I'm just going to click on our P&L open. If you left click on this, you can see all the different purchases that we've made. We started back on the 9th of June, and we've just added every Monday. I go in and buy $5 worth of Apple or Amazon or AVGO or Berkshire Hathaway, and you can kind of see the different prices. Most of these have been trending up since the 9th of June. So most of these, our first purchase was actually much lower than our last purchase. So, Apple, for example, we bought $5 worth when it was trading at $200. And this morning I went in and right after the open bought $5 worth at $226.80. And the question often comes up, well, why didn't we just invest all of it back here on the 9th of June? And because this is stock investing for beginners, we're trying to help people that are coming out of high school, maybe just finishing college and getting their first job, and they're starting to invest. And how do they do that? We've been using, kind of simulating what would be called the stock or Schwab stock slices. And that's not a recommendation to use that. And, all investing involves risk with those, but that's a program that you can actually go in and buy $5 worth of these top 10 stocks. And we've gone through that many times. You can go back and see the archives, but I just wanted to give you an update that we are continuing to do these every single Monday. I go in and buy $5 worth of each one of these, and it's $50 a week that we're investing. And you can see that we're making some money on these. Or Costco is actually net down. So let me just show you this one real quick. But our first purchase was when the stock was at $1,008. And so the stock's actually gone down about $50, almost $60 since, we started. And so our average cost of the shares is going down from our first purchase. But, we're still net down on this position. And that will happen as the stock either trends down a little bit, but all of the others are profitable on that particular plan. Our plan 3, and this is what I wanted to talk about today, is I've had a lot of questions about, well, when can I add to our position? Again, as a new investor, you a lot of times you just don't have a lot of money. We're doing a mock portfolio of about $10,000 here, where we're investing up to $500, which is 5% of that $10,000 mock portfolio. We have a fairly simple investing plan that we introduced and covered all the rules for that in our episode 3. And over the last several weeks, we've been going over stop adjustments and buying new positions and everything. But this is using a 50-period moving average and a MACD. And basically, it's called 2 green arrows. When those are both green, not necessarily on the same day, but at the same time, then that's a valid buy signal. And then we have some methods that we position size on that. And actually, we got stopped out of target. So let me show you this trading journal first. The trading journal, we got stopped out of target on the 20th. And, one of the things that's interesting when you start monitoring your position, or if you're recording those, these are all the stocks that we've been stopped out of since we started. I think there's been 9 of those or something like that. But anyway, we got stopped out on the 20th of August on target. So that opened up an opportunity to buy, a new position. And so anyway, I wanted to show you this just kind of for disclosure here. We're down about $224 on the stuff we've been stopped out of. But in our positions here, our portfolio that we have the open positions, and this is one of the things a little challenging when you do a longer term type of strategy. You're not recording any profit taking. The profit taking in this particular plan is really if you get stopped out, which is a great segue into like adding to our position. So what I want to do is to take a look at MS and AMD. These are 2 stocks that we've been buying since the beginning, and I wanted to show you kind of how the progression works and when it might make sense to add. Some investors will wait for this particular event before they add to their position. So anyway, when we do that, let me show you here the chart on MS. So MS, you can see here, our first purchase on MS, and I want you to write down in your notes somewhere, write down, this entry price and our initial stop. Okay, so again, just for review, the stock price was above a rising moving average. That's one of the things that we're looking for our valid buy signal. And we had got a green arrow on the MACD. The stock had gone above the moving average back on the 2nd of May, and the green arrows are green until they turn red. All right, so here this particular day, the stock had kind of broke out to a new high. we took that as a buy signal and we got in on the first purchase on the 24th of June, and our entry price was 136.25 and our stop was at 122.64. Now, very first thing that I know some of you are asking or thinking is like, man, that's a long way away. That's $12 or $14 away. That's 10% I'm risking on that. And that's just based on the rules. You don't have to risk that much, but that's just how we set this plan up, is the stop goes 1% below the moving average. And so what happens now, the stop adjustment rule, is when the stock gives us a new buy signal, which happened here. You can see on the 30th of July, we got a new buy signal. And if we didn't own the stock, we could actually buy it there, right? And so, you know, if we bought it there on the 30th, which is right here, if we bought it there on the 30th, then what would we do? Well, we would set our initial stop 1% below the moving average. So the idea now is we already own the shares. So the opportunity now is to move the stop up. And so our first stop adjustment, look at this. Our first stop adjustment, we almost move our stop up to our purchase price. Now, again, just to disclose here, stops aren't guaranteed to get filled at these prices. It just executes a market order and it could get filled significantly lower. But the point is, you know, in a very liquid market, if the market's trading near that price when the market opens, there is a pretty good chance it's going to fill there when the market's open. But it could gap over, you know, down or below that overnight, and then we get stopped out much lower. But here on the 30th, we got a buy or a new buy signal, and we adjusted the stop to 134.51. A few days later, we got another green arrow on the moving or the MACD, and so that's another valid buy signal. And we could, again, if we didn't own the shares, we could certainly purchase them that day based on the rules, and we would put the stop 1% below the moving average. Now, this one's kind of interesting because the moving average, I think if I remember right, the stop was supposed to go like at 136 and change, but the last low was right there. You see this day here. This is on the 1st of August. The low price was at 136.17. And we've been kind of talking about this idea of moving the stops. And so at the time where that was our last low in the trend, putting the stop above 136.17 may not make sense to some investors. And so we just decided to put the stop 1% below the low price in that last low of the trend. And that gave us a stop at 134.80. Now, on Friday, we got another buy signal. And now, again, remember, we just got stopped out of the target position that we had for a little bit of a loss. And so that opened up some space to buy a new position. So let's zoom in on this one real quick here. If we bought some shares here at the end of the day, you know, we have a green arrow on the MACD. The moving average, you can see, is at 140.93. And so you guys help me out. What's the stop? Based on the rules, if our moving average is at 140.93, where would that stop go if we bought some shares on this particular day? Well, let's take a look. So 140.93, let's take our calculator and just figure it out. 140.93 times 0.99 is how you get that stop number. And so that would say 139.52. Now, again, you don't have to put the stop there. But one of the things, the checks that most people will do is they'll take a look at the last low, which it looks like in the short term, it was this low at 141.03. So some traders would say, well, 159 or 139.52 makes sense to put my stop there. And let me zoom back out for a second. Now, what do you notice? And because this is the important consideration for our class today, is when do we add? When does it make sense to add to a position that I've already got? Well, if our stop's at 139.52, what do you notice about our entry price, okay, at 136.25, and our new stop at 139.52? Well, this stop is about $3 above our purchase price. So theoretically, right, if we were to get stopped out at 139.52, again, no guarantee that will happen, but theoretically now we don't have the risk on these original shares. Of course, we have the stock could go to zero, and we are still risking the 136.25. But if with stop orders above that, and we got stopped out, then that first basket of risk that we had essentially is moved now, and we've moved that stop up. So this is when some traders will look at this, or some investors will think, okay, I can add now because my original purchase is now going to be below my current stop order. All right. And so that's what I did on MS, where we added, and let me share my trading journal here real quick and just show you. This is, I've recorded some of the buys over here. And you know, in your own investing, in your own trading, in my own personal trading, I like to keep a journal of all the transactions, buys and sells. In our webcast, we're just able to show a few of these for, you know, how to use the trading journal. But you can kind of see here, and these aren't in order because of how I did this, but you know, we bought our first batch of MS, 3 shares on the 24th, and then we added to our position on the 22nd. And you can see we bought some at 136.25, and then we bought some more at 148.01. Now, the first thing comes up is like, well, why didn't you buy all 6 of them back here? Again, not the plan. It's not the plan. That was just where, you know, our position sizing, our investing rules, and everything else just allowed us to buy 3 shares there. And essentially, we've created a new position with MS instead of one of the other stocks. Now, you can see here, we did get a buy signal on CVX, so I went ahead and bought some shares of those, and now we have a 20 open positions, or 20 different stocks that we're trading, which is kind of the maximum size of our portfolio, okay? But there's our purchases on MS. Now, I'll come back to here because I want to show you now the chart on AMD, because AMD was very similar. We did the same thing. AMD, you know, we had the buy signal here on the 16th. We got a green arrow on the MACD over here, and the stock was trending up. The moving average was rising, made a new little high on there, and so we bought the stock there. And then S is asking where we can find the trading journal. If I put the link in there, it's also in the description, but you can find that trading journal on the schwab.com/coaching page. Go to our stock investing for beginners, and there's a link for it there. But, you know, we added we bought our first position on AMD, and then, you know, when do we adjust the stop? Again, this is kind of quiz time for everybody. So you guys help me out putting this in the chat. When can I adjust my stop? Okay. Well, the first adjustment that we hope to see is when the stock gives a new buy signal. The MACD here on the 15th of July gave a new buy signal. And if we did not own the stock, we could buy some shares that particular day. Or if we own the shares, we can adjust the stop. And so that's what we did here on this day. We moved the stop up to 121.44. Okay, again, our purchase price that time was about, what was that? About 123, 124. So that kind of remember that number, all right? So, you know, we bought some, you know, we adjusted our stop here on the 15th. And then, you know, we got a red arrow over here. Now, this is an interesting question right here that I want to cover, and this is why I brought AMD up. Is AMD, you may remember back here at the end of July, first part of August, we got stopped out of a few things. And so again, we're looking in our watch list, which is the S&P 100, we're looking for opportunities to, you know, maintain that 20 stock portfolio. And so AMD just happened to have, you know, green arrows. Now, some of you have asked, well, how long is that green arrow green? Well, and the answer is the green arrow is green until it turns red. And so the stock was trending up nicely. It pulled back here one day. And so, you know, we can see the MACD is coming down, but the last time it came down, it was so strong in the trend that it didn't go red. It just went back green. You guys see that? It came down for a few days and then bounced. A bounce by definition is a close above the high of the low day. And so we got a bullish bounce here on the 23rd, and then it started to make a new short-term high in the trend. Well, similar thing happened over here. The next day, the stock actually closed above the high of that previous candle. And so I added to our position here. And, you know, we don't know if the next day it's going to go back up in the MACD like it did this time there a week or so earlier, or if it's going to keep going down, which is what happened. Okay, so the next day we actually get a red arrow. So if I saw it this day, that technically is not a valid buy signal anymore, but it was valid when we got in. And so I added to our position here. And the stop that particular day would be where? Okay, 1% below the moving average, which was 139.01. And if we pull up our calculator again, so 139.01 times 0.99 equals 137. And if you remember, our purchase price was about 124. So again, the concept and the answer to the question, when might it make sense to add to your longer term positions, is as you adjust your stop up based on this real simple plan that we have, if your initial stop or the adjusted stop gets to be above that initial purchase price, then that might be a time that you could add to that position. And, because the stop is above that purchase price, we have, again, theoretically, if we get stopped out near the stop price, we would actually make money on that first set of shares that we purchased. Okay, again, no guarantee it doesn't gap over that. But anyway, so that's what we did on AMD. AMD, is basically in a non-buy signal scenario right now. And so that's, we don't do anything. Our other stop adjustment that we've talked the last couple of weeks is if we get red arrows on the moving average, then we can move our stop as well. All right. So there's a couple questions in there that I'm looking through. Yeah, some questions about the buy. Looks like you guys are helping each other out. There is a survey in there. I would love to hear your feedback on the survey. Want to see, what you think of our different plans. Let me know what you'd like to see going forward. There's been some requests to do some dividend investing, which we'll look at as the class moves forward. But also just love to hear any feedback that you have. And I also ask you to, many of you have been around for a long time, you've been investing for a long time, but if you have friends, children, grandchildren that could really use some sort of catalyst to say, hey, you can do this. Hopefully we've shown some things on our webcast that where somebody could get started with that investing journey. And one of the things that we talked about was that the time in the market is one of their greatest assets. And so, please share this with others there. It looks like most of those questions have been handled. But if you have some other questions, please go in there and write in those questions and Brett can handle those. Now, we're about at the time that I wanted to finish up. So let me just, again, kind of do a little recap for this recorded part of our session. We went over our top 10s. We're investing $5 per week in these. We're using the Schwab stock slices simulation because it doesn't work in paper money. You have to do that on the schwab.com site. But it's been a really fun thing. You can see we have about 1/4 of a share on some of these. We have 3/10 of a share on Google. We have 0.12 shares of Berkshire Hathaway. But these are just small little pieces. We're getting started with our investing journey. We've gone over our 2 Green Arrow investing plan, where we're constantly monitoring this. Sometimes during the week I'll make some purchases when we get stopped out of something, and then try to report on that today or on Mondays when we hold our class. And this portfolio right now, again in paper money, is profitable. We've been stopped out and have lost about $224 on the stocks we've been stopped out of. But I did want to share that with you. And again, remind everyone our presentation today is for educational purposes. And hopefully this was helpful for you. And now I want to do a hard stop here. This is our recorded session, so we're done with this one. All right. Now,